You were listening to chartingwealth.com for Tuesday, the 22nd of August, 2017. We see that stocks are mixed. We have the S&P 500 up 0.9% for the day. We see that the Qs, which is the NASDAQ 100, down for the day 0.11%, and we see bonds up about 0.25% and gold up 0.38%. Now let's jump first right into the weekly chart on the S&P 500. That weekly chart continuing to show a drop down in it. Now remember, even though the market was up and it's the first day of the week, on the new weekly chart we have a red down candle. Why? Because we use Heikin Ashi candlesticks. In Japanese, Heikin Ashi means average pace. It's calculated differently, not simply open, close, high, low. But if you will go to chartingwealth.com, we have a great video training there on Heikin Ashi, H-E-I-K-E-N-A-S-H-I. You can just search candlesticks or see it under the training videos. It is fabulous. It will give you, the reason we use it is very easy. You don't have to memorize all these patterns and everything else to know how it works. It's a great visual representation. It's calculated differently, helps you see the average pace. So please jump into that, learn it, use it. Very, very helpful. It's why we use it, because it works. And what do we see going on? Well, we have a confirmed down move on the weekly chart. And of course, the 2-day, they're laminated. They both crossed over going down on the week ending the 11th of August. And now we're going into our third week of down movement. Derivative oscillators really heated up in the downward momentum. So let's take a look, dive in a little deeper. What's going on that 2-day chart? You can see that the 2-day chart has moved down significantly, particularly the 2-day chart ending on the 21st. So as we continue to look at what's going on, we're going to delve into the 4-hour chart, and we can see that we had movement down in the morning, a little bit of a recovery in the afternoon. We still have the derivative oscillator heading down. Of course, our jumping in point was after the close of the candle, and we are a little bit below that where we jumped into this down move since, of course, why? Well, of course, our pullback ended, and then we had an entry point. We'll continue to keep an eye on this 4-hour candle, and we like seeing the derivative oscillator continuing to heat up. Well, I don't know what you say, heat down. Continue to move, swing down, and we see the PPO, the price percent oscillator, move down. So keep an eye on what's going on there on those down moves on the S&P 500. Now let's talk about what's going on the Qs. QQQ, of course, it's been in a crossover going down since the weekly vertical crossover happened way back on the 16th of June. We did see some down movement for about 4 weeks, and then of course it popped up for about 3 weeks or so, and then started moving over, going down, never crossed over, and didn't even laminate like it did on the S&P 500. The Q stayed below, and then of course we saw the 2-day vertical crossover happening back on the 11th. That was Friday the 11th of August. Almost said April again. And we saw a steady down move since then, derivative oscillators continuing to move down, and of course a spike down after the 15th on the downward momentum of the price percent oscillator. Those of you familiar with the MACD, very similar to that. We have another good training on why we use the price percent oscillator versus the MACD. Because of the way it's calculated, you can actually compare it across lines. You can use indexes and single stocks, compare things in the same sectors. So much better. Also, follow that training at chartingwealth.com. So as we look at what's happening on the 2-day, let's look at what's going on that 4-hour, of course. We saw that the 4-hour had pulled back, and then once it crossed over, gave us a good jumping in point there after the afternoon of Thursday the 17th. We had a jumping in point sometime Friday morning. And of course, if you would have jumped in then somewhere between 140 and 142, I guess what was that, 140.65 and 142, the opening at 142, high at 142.95, and of course 141.53 was the last during that morning. we see now all the way down to 140.99. So again, we're just watching and waiting, seeing how this thing continues to play out. We see that we have confirmed continued down moves, like we said, for the day, down 0.13%. And of course, we also talked about that 2-hour chart for a jumping in point somewhere around anywhere between 141.95 and 143.56. And again, you can use the 2 or the 4-hour. We ask that you practice backtracking and see how well that's worked over the last few weeks, or even going back to the prior same time of year. Remember, we're still in the summer doldrums, still in the summertime trading zone. That fall-winter trading zone is coming up, but hasn't hit us yet. When it does, of course, we typically get smoother, longer moves in one direction or the other, because the volume comes back into the market. Let's keep pushing through these charts. Next, we go on the weekly chart to TLT. That's our 20-year bond fund, up about 0.25%, not quite 0.24% for the day. Of course, we're above the gold weekly trend line. And as we look at what's going on, of course, we had a crossover going up back on the, let's see. Let's go from the weekly chart to that 2-day chart. We can see the 2-day vertical crossover going up occurred on the 9th. That was Wednesday, the 9th of August. And we had the market boom up over the next 2 days, sort of slide sideways, and then it started moving up again nicely. When we look at that 4-hour chart, we saw the rollback occur, and again, it's the opposite of the rollback on the down moves on the stocks. This is a rollback going down on the bonds and then moving back over, going up, backtracking in the same position as the weekly and the 2-day vertical crossovers going up. And of course, we had an entry point somewhere there around 126, 127. And we have continued to see the market continue, like we said, over the course of the last day to move up 0.24%, right around the 126, 127 mark. So we'll continue to watch this carefully. Everything's looking nice. On the 4-hour chart, we'll continue to see an acceleration of the derivative oscillator going up, and we've had a sort of a kink over moving up with the up move in the afternoon on the price percent oscillator. We're going to our last chart now. That is, of course, gold up 0.38%, the biggest up for the day. Gold, of course, is tracking nicely. We're going into, what is that, our 7th up candle, 7th week of up movement in gold. The weekly vertical crossover, and we on the weekly vertical crossover, we can see where that occurred over the week ending the 11th of August, and we've continued to see upward movement well above the weekly trend line. As we focus in on that 2-day trend line, which has been crossed over for quite a while, all the way back to the 24th of July, we've just continued to see nice up movement. We're well above that trend line. Also, derivative oscillators losing some energy, but the price percent oscillators continuing to move up. And as we hone into that 4-hour chart, we see it did finish its pullback, and then, of course, tried to slide back over. Big up day back on the morning of the 18th, and what we've had happen since then is sliding sideways. So continue to keep an eye on gold. Remember, the 4-hour chart is really our dispositive chart. It typically is a total trading chart and works nicely, but it's gotten sloppy here over the last 3 days or so. So when we see things laminated, trying to figure out where they're going, gives us some concerns. And again, we're using Heiken Ashi candlesticks. So continue to watch gold on that. Remember, that 4-hour chart, so dispositive. One thing that does help is you can see the up movement, at least in the derivative oscillators oscillations. So, and we do see that the blue signal line, or the blue PPO rather, has pulled away from the red signal line, particularly in the afternoon on the first day of the week, Monday the 21st. So that's where we are, my friends. Thank you so much for being with us. You have questions, problems, concerns, we're always happy to hear from you. Write us cw@chartingwealth.com. If you're not already subscribed to our daily market review, you need to do so. Why? Because you get all sorts of great things from us for free for doing that. That includes the daily market worksheet, the weekly market worksheet, the trade sheet, so you can accurately and intelligently track your trades and learn from the good, the bad, and the ugly of what you experience in those practice trades. In addition to that, you get our How to Read a Stock Chart video and the layout that we use at freestockcharts.com. Thank you so much, my friends. God bless from the whole team here at chartingwealth.com.